The Real Investment Show.
And welcome back to Financial Fitness Friday. So we have another Lunch and Learn coming up on Thursday, November 15th at 12 p.m. This will be great. This is a year-end economic review, what you can expect from bond and stock markets, tax-effective portfolio tips for year-end planning, and how midterm elections are likely to move markets. Listen, we have to look at how politics does affect markets, and I do think that this one is going to be a big one. Based on the fiscal spending, it might just shift animal spirits a bit as we move into the year end if gridlock is imminent. So we'll have to wait.
Rich, let's talk about that a little bit, though.
Yeah,
so
go
the
ahead.
shift in this is actually probably a really good thing. I mean, we got put in this environment because of supply chain issues,
Right.
Monetary and fiscal policy, and really specifically, that could put a kind of curtail some of this, which is good and bad in many ways. But the economy may view this as something that slows things down enough where there's not the hope of additional stimulus on the horizon. I mean, what do they do at this point, right? You're trying to fight this inflation, and all of a sudden, what tools are you going to use? Where's your arrow? Do you have any arrows left that actually are meaningful in the sense of other than just saying, hey, we're going to cut rates? I don't think they can go out and give stimulus packages again, or at least they shouldn't.
No, but you never know. If we don't have gridlock, we might get another one. And this is where we have, like you said, the supply chain issue.
Yep.
And then we also have some demand. We have what I call revenge demand. You know, locking up the economy for so long was the absolute stupidest thing we did. And we're going to pay for it for generations. So people are still going to travel. They're going to get extended on credit cards. They're going to do whatever they can because you can't lock me up anymore. And you have to work both sides of this. You have to work both sides of this. And yes, we are seeing demand fall in many areas, Danny, right? And we've talked about, listen, you want to go out and buy your holiday gifts, you're going to get deals. You're going to get deals. But on the things you need every day to live, roof over your head, food on your plate, gas in your car, many of our policies stand in the way of this. I still don't understand the logistics of the supply chain. It doesn't seem like we've done much on that side either, Danny. So we're not doing much to move all this stuff along, and the Fed keeps pounding. And if you look at sticky price inflation, if you look at the chained PCE, you look at all this stuff, inflation hasn't, in essence, really budged. But some of the rate hikes we're seeing now, we're not going to see the effects of those for 6 months to a year.
Yeah.
So we don't even know. As Lance says, we probably did go too far already, but we just don't know. It doesn't mean you won't get rallies. It doesn't mean you won't get the ability to reallocate by the end of the year. That doesn't mean, because I think next year is where the shift hits the fan, right? Next year is where we're going to have some concerns, I think. We'll see.
I don't see how we don't. I mean,
I don't either.
You and I were visiting with some people recently as we were talking about, things that were happening in the economy. And one of our clients made a really good point. They work at a food bank, kind of volunteer on the side a couple days a week. And they said, listen, week over week over the last month, we're seeing a 50% increase in meals that we're giving out week over week.
Wow.
And I'm like, well, are you talking to people? How are you? Can we put something to it? He's like, look, all I know is the number, and the amount of work we're doing has doubled. I used to be able to go in and knock this out in a couple hours where it's an all-day event.
Wow.
So that is really disheartening and really kind of scary. You think about that's just one county in one small place, right? But we know that if we're feeling it here in Texas, for some reason, well, we know the reasons, but we've always been able to kind of, curtail some of the pain here better than others. And, obviously our economy is a little different than most. That may not be the case anymore.
Right. I mean, the financial distress is real as prices stay elevated. And we see double-digit inflation on food prices. People are changing some of their habits, absolutely. But there's just so much you can do. Wages are not keeping up with inflation. And speaking of inflation, we're going to talk about, is there a positive side to it? There is. When it comes to certain numbers and metrics, we're going to talk about that too today. But so Danny, on the any other interesting questions you got from people about their 401ks or insights that you got when you were on Fox yesterday?
I think the biggest thing is that people are concerned. They don't know what to do. I mean, and a lot of you guys do, and you're thoughtful and you have a plan. Most people, they don't have a plan. They don't understand what, probably what the investments are in the accounts.
Right.
Nonetheless, have an actual financial plan to understand what they're there for, right? So one thing to keep in context and understand that, look, we think about the numbers and the percentage over and over, and it's really, and I get it. You see your account dropping. It's a tough time. It's a tough environment. And there's been really no place to hide but cash.
There hasn't been.
So, I think, what a couple things that I've heard is that, hey, do we need to get all the way out? And, the problem with getting all the way out, and we know this, we talk about it often, is that you don't get back in. And I think that's a big mistake.
It is a big, right.
All the way out or all the way in. Also, still have people who are thinking about, okay, I'm near retirement. I need to be more aggressive, but I don't know if I should in this environment. And, you and I talk about this often. People make big mistakes getting too aggressive, trying to make up for lost savings that wasn't done prior. And that's what comes and bites you in the rear. So I think people are stuck. They're trying to balance this line of we've been able to use the markets to kind of make up for some of the lack of savings over time. Some people, right? I mean, a lot of people out there, and I know a lot of our listeners are really, really good at this, but some people have had to rely on this to try to make up for it. That's just not what you can do right now. Now, if you have cash on hand, I think you're going to be in a great space. I mean, everybody waits for Black Friday to go shopping. Guess what? We're in Black Friday right now. There are opportunities. Now, does it mean it may still get cheaper? Yeah. Funny thing about inflation, Rich, is that we all want to sell stuff at higher prices. We just don't want to buy it at higher prices, right?
We don't. Unless it's stocks, we don't want to buy stocks on sale ever. Yeah. The point is, you just don't have enough pain out there yet. If yields keep going up, we just got this question on our YouTube channel. If yields keep going up, yes, it's going to affect stocks adversely. That's just a fact. There's going to be competition for the money, right? I can get a 2-year treasury for 4%. I'm getting, Ally just sent an email and
4%, 4.5%.
4.5%, right? So the only thing that you're diversifying into, bonds in essence, are not working. This storm has been somewhat unique. I haven't seen this kind of damage to a 60-40 allocation, a 20-80 allocation for as long as I'm doing this, and that's like 35 years. So this is really unheard of. Everything's moving in lockstep. But rates can only go so far. I don't think the bond market's going to get this right, but I think rates can only go so far just based on what's the interest on our national debt now per year?
Yeah,
over $1 trillion?
Yeah.
There's only so far rates can go. They cannot go to where they were in the 70s and the 80s. We had a totally different economy. The debt to GDP ratios, household debt levels were so different. We are so over leveraged. Something is going to break way, way before that. And then the Fed will be going back to all its tricks, right? Quantitative easing and lowering rates and all of this stuff. This transitional part where the numbers got messed up after the pandemic, especially in the labor force numbers, right? We see where labor force participation rate, millions of people are just gone.
Gone, like not,
right.
They're not there.
And you know what? There's still a lot of stimulus out there. People don't realize it. Our social safety nets, income tax credits, all this stuff we give away, states are now doing their own thing. Employees, you see it all the time. Like you look at TikTok or you look at articles and all this stuff, and there are people out there saying, I don't want to work. There was one girl, she started her job at like Equifax or something. It was her first day. And she walks in and someone at the front, or a few of the employees said, oh man, you're not going to like working here. And she left. She didn't even start. She goes, why? I'll listen to them and I'll just leave. You're at that point where people feel they could do that. And the only reason why they can do that is, one, they're living smaller. They're living at home, right? We have more people living under one roof than ever before. since World War II. And you have all these stimulus packages, and then you say to yourself, I'm not going to stick around. If these people are telling me this place stinks, I'm not even going to give it a chance. I'm going to just leave. So there's something that's preventing people from taking that next step. There's got to be some safety net out there or cash out there that is preventing people from doing it. I don't know how long that's going to last, Danny. And that means the Fed's got to keep pressing, keep pressing. But it is already damaging. And how many over-leveraged companies do we have out there? As well as we're over-leveraged on the government side, on the fiscal side. How over-leveraged are some corporations that have been walking around and have been able to refinance with cheap debt, and now they're going to refinance and look what their rates are now.
Oh, yeah, we're about to find out. And what happens to stock buybacks? We haven't gone down that path where these companies been able to issue debt just to turn around and buy stock. I don't know if you still see that. That doesn't look the same. The numbers won't work at some point.
Right. It's just stubborn. And if you're going to have to see unemployment go to 6.5% per, say, Larry Summers.
They want it like 4.5%. I mean, that's what the long-term projections over the next couple of years, 4.5%.
Right. So this inflation is going to stick around for a while.